the British pound plunged against the Swiss franc, just enough to break below the 1.06 level and then turn around and show signs of life. All things being equal, this is a market that I think could go looking to the 1.0725 level, where we had seen a certain amount of resistance. The NASDAQ 100 initially fell during the trading session on Friday, only to turn around and show signs of life. At this point, it looks like the NASDAQ 100 will continue to pay close attention to the 25,000 level. Breaking above the 25,000 level, it opens up the possibility of a much bigger move, and quite frankly, we almost got there at the end of the session. Metals get crushed on Friday. This is Chris from Hola Prime, taking a look at your technical roundup. The gold market initially did try to rally a bit during the trading session on Friday, but has since collapsed to slam into the $4,200 level. The $4,200 level obviously is a large, round, psychologically significant figure, and it is an area that has shown both support and resistance over the last couple of days. If we were to break down below the $4,200 level, then it's possible that we could drop to the $4,000 level, because quite frankly, this is a market that has been far too overdone for far too long, and sooner or later somebody will have to try to take profit in a market that has been just absolutely out of control. The market has basically been the only thing people were talking about, and now we have a situation where you may look to the Fibonacci retracement levels to get some type of value or entry. If we fall from here, the $4,000 level is at the 38.2 Fibonacci retracement level. Ultimately, this could be where we end up. We'll just have to see if there's any follow through. But this is a market that has been very noisy for a while, so a little bit of sideways action, or hopefully that pullback, could get traders interested in this market again. The silver market has pulled back rather significantly during the trading session here on Friday. It looks like $50 is trying to offer a little bit of a floor, and quite frankly, with this latest move, we've got a long way to go before you would actually see value. I'm starting to hear people in public talk about buying silver that have never traded a day in their life. I'm also starting to hear analysts try to explain how it's not a fresh new all-time high that we hit because of inflation and the shrinking US dollar. I'm also hearing stories about AI and how that's driving silver, but really this is a situation where traders will continue to be noisy about getting into the market. But really at this point, I think you've got a situation where you have to look at this as a potential buying opportunity on massive dips. And I think we could see a move down to $45 before it's all said and done. We'll just have to see. Was this day here on Friday a shot across the bow? Did it mean anything, or do we go sideways? One of those two things will have to happen in order for people to find value again. The euro doing exactly what I had thought it might do. It tested this trend line and it failed, forming a shooting star on Friday, suggesting that perhaps the euro isn't that strong after all. The 50-day EMA sits right here as well, and that of course attracts a certain amount of attention. But with this being the case, I think we could find ourselves going back to the 1.16 level. If we do rally from here and break above the top of the candlestick, there's a lot of noise all the way up to 1.18. So if we rally, I'm not that excited about buying. I think we have to look at this as a situation where there might be a lot of people out there willing to fade rallies and try to take advantage of cheap US dollars. A breakdown below the 1.1550 level then opens up the possibility of a move to much lower pricing near the 1.14 handle. The British pound has gone back and forth during the trading session on Friday as we tested the 50-day EMA. The 50-day EMA of course, is an indicator that a lot of people will be watching, as it does typically end up being support or resistance. And during the day on Friday, it certainly looks as if it is offering resistance. The market breaking down below the 1.337 level opens up the possibility of a drop towards the 200-day EMA. The 200-day EMA, of course, is an area where a lot of people will be paying close attention. It is going to be a trend-defining support level. If we break below there, then the 1.32 level is a major support area. The market has been bouncing around between 1.32 and 1.37. With this, a breakdown below 1.32 would open up quite a bit of selling. The British pound has been stronger against the US dollar than most other currencies. So pay attention to the fact that this is rising or falling, because if it starts falling, that shows that the US dollar is really picking up strength. The US dollar initially fell against the Swiss franc to turn around and form a bit of a hammer. This suggests that we are going to bounce. And at this point in time, I think you've got a scenario where the 0.79 level continues to be a bit of a floor. I don't like shorting this pair. I do think that we probably get a little bit of a bounce from here. But you also have to keep in mind that both are considered to be safety currencies. And in that environment, we may continue to see a lot of noisy behavior based on the fact that there are a lot of concerns out there. And of course, really not sure which one would be favored in the environment that we find ourselves in. However, the US dollar is doing fairly well against other currencies, so one would assume that might end up transferring over to this pair. We'll just have to wait and see. The US dollar initially fell during the trading session on Friday against the Japanese yen, only to turn around and show signs of life. All things being equal, if the market were to break above the 151 yen level, then I think you've got a scenario where we really could start to take off to the upside, perhaps reaching the 153 yen level. If we turn around and break down below the bottom of the hammer from the Friday session, then we could see the 50-day EMA come into the picture. Underneath there, then you have the 200-day EMA. Ultimately, this is all due to the election in Japan and its potential moving of monetary policy. After all, market participants believe that the new PM is probably going to be more along the lines of loose with monetary policy and demanding that, and it could open up the possibility of a continuation of this move. On a move to the break, to break the upside, the 153 yen level would be a target. If we can break above the 153 yen level, then we could continue to see a much bigger move in general. I have no interest in shorting this pair, and I think we continue to see buyers. The US dollar initially tried to rally against the Canadian dollar during the Friday session, but we've seen a little bit of a pullback, and part of this might be the fact that foreign securities purchases in Canada were stronger than anticipated. That being said, we'll have to wait and see how this turns out, because quite frankly, this 1.40 level is an area that I think ultimately will offer a bit of support. If we can turn around and break above the top of the candlestick for the trading session on Friday, then I think we've got a move to the 1.4250 level happening eventually. With this, I think you have to continue to look at this as a market that the interest rate differential continues to pay. And therefore, if we hold, then we eventually get our position padded enough that it really starts to pay off. If we break down from here, the 1.39 level should be support, as the 50-day EMA has broken above the 200-day EMA, kicking off the so-called golden cross. The Australian dollar initially fell during the trading session on Friday, but then turned around to show signs of support. By bouncing the way we have, we ended up forming a bit of a hammer, and that hammer is, of course, a positive sign, but we're sitting just below the 200-day EMA. The 200-day EMA, of course, is an indicator that a lot of people will pay close attention to, but basically, this is a market that I think just goes sideways in general. We just don't have uh, a scenario where you can throw a ton of money into this with the idea of a big move. Now, if you are a short term range bound trader, then traders will continue to look at this through the prism of the 0.6550 level, offering a bit of a magnet for price. The market continues to just trade sideways while the rest of the markets around the world continues to go uh, a little bit more aggressive in one direction or the other. With that being said, the market is one that's been a little less aggressive against the US dollar, even as the US dollar was crumbling, and therefore I think the Australian dollar continues to underperform. In fact, you can come up with that thesis with most Asian currencies. Here's a perfect example. The New Zealand dollar initially fell, rallied a bit, but only so much. This is not an impressive recovery for a market that has sold off the way it has. I do think that maybe we continue to see a little bit of a bounce here, but I'll be looking to fade rallies in this pair as the New Zealand dollar is highly levered to Asia, China, and of course, risk appetite. It is worth noting that Trump has announced that he and Chinese leader Xi Jinping will be meeting in 2 weeks. But with this, I think you have a situation where it's going to take a lot more than that. And I think ultimately you're just looking for signs of exhaustion. As soon as we get that exhaustion, I'm more than willing to start shorting. If we break down below the 0.57 level, then we could see this market break towards the 0.55 level. Really, at this point, I don't have a scenario in which I'm a big buyer, but I also think if we break above 0.5850, then you have to have that conversation. But regardless, if I'm going to start shorting the US dollar in a risk on type of scenario, I don't know if it's the Kiwi dollar that I'm looking to get involved in. The euro has initially tried to rally a bit during the trading session on Friday, but then turned around to show signs of weakness. Ultimately, this is a market that I think continues to see a lot of back and forth trading. We are sitting just above the crucial 50-day EMA, which is right in the middle of this overall range. The 0.86 level is a bit of a floor, and the 0.8750 level is a bit of a ceiling. We're basically right in the middle, so it does make a certain amount of sense that we just go back and forth because we don't really have anybody winning this argument. If and when we can break out of this range, it should be good for a 150 pip move in either direction, meaning that we could be looking at 0.89 on a breakout to the upside, or we could be looking at 0.8450 to the downside, which is an area that's been important in the past. So it's definitely worth watching. Furthermore, you have to keep in mind that this has a major influence on how the pound or the euro may operate against the US dollar and multiple other currencies around the world. The euro crashed against the Swiss franc during the trading session, but somewhere during the trading session, we started to see the Swiss franc sell off. Part of that might have been that announcement with President Trump and Xi Jinping meeting in a couple of weeks. It's a little bit more risk on. But it's almost like a coordinated effort to bring down the value of the Swiss franc. This is something that the Swiss National Bank is known to do at times. And while I can't necessarily say that intervention is a known thing, it's possible that they are at least eyeballing these markets. Keep in mind, this is a pair that moves with risk appetite, meaning that the euro rallies when people are willing to put risk on, and they buy the Swiss franc when it's a situation where they start to buy the franc if they are concerned. all things being equal, we are at the bottom of an overall range. And I think being at the bottom of this overall range opens up the possibility of a bounce here. And that certainly looks like traders have tried to do that. We've had a couple of inverted hammers and broke down from here. So it does suggest, at least, that the traders could, if we can break above there, really start to take off. All things being equal, this is a market that I think bouncing from here to reach the 50-day EMA makes a certain amount of sense. If we break down below the bottom of the candlestick, then the 0.92 level comes into the picture as support. Anything below there would be extraordinarily negative for the euro, at least against the franc. Euro yen has plunged a bit, only to turn around and show signs of life, forming a bit of a hammer. This hammer, of course, is a good sign, and it does suggest, perhaps, that the euro is ready to continue going higher. It's a little early to suggest that yet, but it does at least look like it's possible. And with that being the case, I think you have to be interested in buying this pair and perhaps trying to get back to the highs at least somewhere near the 178 yen level. I'm not a huge fan of the euro, but I like the Japanese yen even less, and that has a lot to do with what we are seeing here, I believe. If we break down from here, the 50-day EMA comes into the picture as support near the 173.65 level. Ultimately, coming into this market, I think you have to recognize this gap as something very important to pay attention to. You see that in all of the Japanese yen related pairs. This is a risk on move just waiting to happen. The British pound plunged against the Swiss franc, just enough to break below the 1.06 level and then turn around and show signs of life. All things being equal, this is a market that I think could go looking to the 1.0725 level where we had seen a certain amount of resistance. The 50-day EMA is likely to continue to be a bit of resistance. But again, this is one of those situations with the Swiss franc kind of turning around randomly in the middle of the day. That suggests to me that somebody's underneath this area supporting this market. Swiss National Bank comes to mind, but we don't know that for a fact. There have been times in the past where the Swiss have flat out said this is the bottom of the market and it's not going any lower. I don't think they will say that this time, but it looks like we are at least seeing something similar to that. We'll just have to see if there's any follow through on a bounce. The British pound broke down pretty significantly during the trading session, only to turn around and show signs of strength against the Japanese yen as we continue to see the Japanese yen look a little suspicious. We had a pretty significant sell-off over the last week and a half or so, but quite frankly, the Japanese yen had been so oversold in such a short amount of time that you have to believe that, of course, was going to invite some profit taking. We've done that, and now we have to ask questions as to whether or not we can continue this type of momentum. I think we can eventually, but in the meantime, I think this is a pair that's probably going to hang out and try to stabilize a bit in order to build up the confidence for buyers to come back in. The 200 yen level is a major support level, especially as the 50-day EMA is hanging around there and it's in the middle of the overall gap. If we break above the 203.50 yen level, then I think it opens up a move to the 205 yen level. Anything above there could open up a much bigger move. The Canadian dollar initially plunged against the Swiss franc again, but it's turned around quite nicely. Again, this is one of those situations where I think this is a Swiss franc story. I do not think this is a Canadian dollar story. The Swiss franc, oddly enough, turned around during the trading session against multiple currencies, and that's something that you have to pay attention to. There were no real major economic announcements besides the idea of Trump and Xi Jinping speaking that really should have moved the Swiss franc. And in fact, there were no actual economic announcements coming out of Switzerland. So I think a bounce, maybe towards the 0.50 level, offers a little bit of a target. That is a previous support level, so if it offers resistance, it would make a certain amount of sense based on market memory. I'm not ready to buy this pair, but I do think a short-term bounce probably comes back into focus. The Canadian dollar initially plunged against the Japanese yen, but did turn around as we were in the bottom part of the gap and did in fact fill it. You'll remember yesterday I talked about how I think all of these pairs, these Japanese yen denominated pairs, will all move in the same direction. But it isn't necessarily the Canadian dollar that I wish to be a buyer of in this environment. Because of this, I look at this as a market that will eventually bounce, but it may not get as much traction as something along the lines of the British pound against the Japanese yen. That being said, if you were to place a trade here, the Japanese yen is weaker than the Canadian dollar, so that's, for the most part, everything you need to know. I think we do eventually go looking toward the 110 yen region yet again. The euro initially rallied against the Norwegian krone, but gave back those gains and has re-entered the previous consolidation area. This tells me a market that's just not ready to go anywhere at the moment, and the candlestick is now sitting right between the 200-day EMA and the 50-day EMA indicators. It suggests to me that we are basically stuck. The move above the 11.75 level should have been a good sign, but the fact that we failed like this tells me that we are going to see a lot of back and forth choppy behavior overall. The euro initially rallies against the Swedish krona on Friday, but runs into that brick wall at 11.08. I think this is a situation where the 11.08 is a major area of both support and resistance. And I think this shows just how the market has been uh, important, and I think it continues to be important. If we break down below the current levels, then the 10.9 level could be targeted, just completing the overall sideways action. The New Zealand dollar fell pretty significantly against the Japanese yen and actually blew through the bottom of the gap, only to turn around and show signs of life and form a bit of a hammer. The hammer being broken to the upside opens up the possibility of a move to the 50-day EMA and then the 200-day EMA indicators. Anything above there opens up the idea of 88.5 yen, but again, this is one of the situations a lot like the Canadian dollar, that I don't want to own the yen, and if I had to trade this market, I would definitely get long. But I'm not a big fan of New Zealand dollars or Canadian dollars at the moment. I think there's better ways to go against the yen, the US dollar, the British pound, both come to mind almost immediately. So keep that in the back of your head. The New Zealand dollar fell against the Swiss franc and reached the 0.45 level before bouncing 50 pips. All things being equal, this is a market that I think will continue to see resistance at the 0.46 level. The 0.46 level is an area that had offered support, but now should offer resistance on the way back up. Nonetheless, I think this is a situation where you need to be very cautious. I think you need to understand that we are in a downtrend for a reason, not the least of which will be the New Zealand dollar itself is weak, but we also have to keep in mind that the risk appetite around the world is just poor. The US dollar initially rallied against the Mexican peso, and as you can see, the markets continue to see this downtrend line come into the picture, and it did turn things around as we tried to break out to the upside. The 50-day EMA has offered a little bit of resistance, and I think the situation right here at 18.5 opens up the possibility of a bit of a ceiling. We have seen that play out a couple of different times this week, And now I think we've got a situation where the market between 18.50 and 18.2 ends up being a range that we're trading in. Keep in mind that the interest rate differential favors the Mexican peso, and therefore a move to the downside makes sense because you get paid to hold that trade, especially if we start to get more risk on behavior as Trump and Xi Jinping speaking is a good thing. Mexico is the world's largest exporter to the United States, so this moves opposite of what you would think. The better the US is doing, the worse the dollar does against the peso. The US oil or WTI oil market initially fell a bit, only to turn around and show signs of life by turning around and forming a hammer. It suggests that the market is probably going to try to rally, but the $60 level above, I think, is a bit of a ceiling. We are a bit overdone, and I think a little bit of a relief rally makes sense, but I'm looking for an opportunity to start fading signs of exhaustion. The exhaustion almost certainly will be something that most people are willing to take advantage of. The $55 level is an area of significant support, and anything below there, I think, opens up a massive drop in this pair, perhaps really unfolding a move down to something like $35. This would be a bad economic sign. The NASDAQ 100 initially fell during the trading session on Friday, only to turn around and show signs of life. At this point, it looks like the NASDAQ 100 will continue to pay close attention to the 25,000 level. Breaking above the 25,000 level, it opens up the possibility of a much bigger move. And quite frankly, we almost got there at the end of the session. At the end of the session, it almost looks like we are trying to do everything we can in order to break out. And that breakout opens up the possibility of a very explosive rally. The S&P 500 continues to see a lot of support, and much like the NASDAQ 100, we bounced off of a trend line and the 50-day EMA, but the 6,700 level being broken to the upside opens up the possibility of a breakout, and given enough momentum, I think will also wipe out the Friday candlestick from the previous week, which opens up a lot of momentum. If we break down below the bottom of the candlestick, then we could open up a drop down to the 6250 level. The US 30 or the Dow Jones 30 broke down below the bottom of the candlestick from a couple of days ago, and breaking below the 50-day EMA was pretty negative. That being said, we've turned around to show signs of life, and I think at this point you've got a scenario where a move to the upside makes a certain amount of sense. I think it's going to be more of a grind than anything else, though, as the market has a lot of noise just above. And with this, I like the idea of picking up dips if and when we get the opportunity. Bitcoin plunged during the session, but then turned around to show signs of stability. We'll have to wait and see how it plays out over the weekend, but Bitcoin does not look healthy. If we get some type of race to the bottom, something below the $102,000 level could be catastrophic for Bitcoin, especially if we break $100,000. That being said, if we can break out above $110,000, then the $115,000 level. Really, at this point, I think it's a scenario where you have to be very cautious. But that being said, if we break down, like I said, you'll probably see a lot of risk appetite out there just waiting to get involved. The Ethereum market has gone back and forth, and you can see it is starting to show signs of stability. The $3,400 level underneath for Ethereum is the massive floor in the market. Pay attention to Bitcoin. It'll tell you which direction Ethereum is going to go. Over the last week, we've seen a lot of volatility, and I think at this point in time, it's obvious that the metals markets are well overdone. I think that will be the story this upcoming week, and you will have to be very cautious with your position sizing if you are, in fact, going to be involved in gold or silver. I also recognize that Bitcoin looks like it's about to get axed, and therefore that could end up being a story next week as well. Stocks, oddly enough, look very healthy. So we'll have to see how that plays out. It might be a down silver, down gold, down crypto, up stocks week. We'll just have to see. Money does look like it's flowing into the United States despite all the gloom and doom, which has been the case for a while anyway.
Hola Prime, trade with transparency.